The checks are coming, and they're bigger than most people expected. Right now, across kitchen tables in every state, in cities and small towns, in apartments and houses, millions of Americans are asking the same question. Is this real? And when will I see my money? I'm talking about real money hitting real bank accounts, not proposals, not discussions, not political promises that evaporate when the cameras turn off. Actual payments that could make a tangible difference in your life starting January 1st. Here's what's actually happening, and I want to be crystal clear about this because there's a lot of misinformation floating around out there, a lot of confusion, and frankly, a lot of people trying to capitalize on that confusion to get clicks or push political narratives. President Trump has authorized a new round of direct payments totaling $2,000 per eligible recipient, with the first distribution scheduled to begin January 1st, 2026. This isn't speculation. This isn't a proposal working its way through Congress. This is signed, authorized, and moving forward. But here's where it gets interesting and where most news outlets are getting it wrong, either because they don't understand the details or because they're more interested in political spin than accurate reporting. These aren't your standard stimulus checks like we saw during the COVID pandemic. This payment combines two separate programs, two different funding sources, two different policy objectives rolled into one deposit or one check. It's traditional economic relief and what the administration is calling tariff dividend rebates. Let me break down exactly what that means for your bank account, for your budget, for your financial planning going into the new year. Because understanding where this money comes from helps you understand whether it's sustainable, whether you might see similar payments in the future, and how it fits into the broader economic picture. The tariff rebates come from revenue collected on imported goods, particularly from China, but also from other trading partners where the administration has implemented tariffs over the past several years. Instead of keeping this money in government coffers, instead of using it to fund other programs or reduce the deficit, the administration is returning a portion directly to American citizens. Think of it as your share of the tariff collections, similar to how Alaska residents receive annual payments from oil revenue. The government collected this money ostensibly on behalf of American interests, and now they're giving Americans a direct dividend from those collections. The stimulus portion addresses ongoing economic pressures that haven't disappeared despite rosy headlines about economic growth and low unemployment. We're talking about rising grocery costs that have fundamentally changed how families shop and eat. We're talking about increasing medical expenses that force people to choose between medications and other necessities. And we're talking about utility bills that seem to climb every month, regardless of how carefully you monitor your usage. These are real pressures affecting real people, and this portion of the payment acknowledges that reality. Together, these two components create a $2,000 payment for eligible recipients. That's significant money, especially for households living on fixed incomes or tight budgets. For many families, that represents a month's rent or mortgage payment. For seniors, it might represent 2 or 3 months of Social Security benefits. For working families struggling with inflation, it could mean catching up on bills, rebuilding emergency savings, or finally addressing deferred expenses. Let me explain exactly who qualifies for these payments because there's been a tremendous amount of confusion out there, and frankly, some of that confusion is deliberate. The mainstream media hasn't done a great job clarifying this, partly because the details are complex and partly because some outlets are more interested in political narratives than helping people understand what they're actually eligible for. So I'm going to walk you through every detail you need to know, step by step, so you can determine exactly where you stand. First off, if you're currently receiving Social Security benefits, whether that's retirement benefits, disability benefits, SSDI, or SSI, you're automatically in the eligibility pool. The Social Security Administration already has your information. They know where you live. They know your banking details if you receive direct deposit, and they'll process your payment automatically. You don't need to apply. You don't need to call anyone. You don't need to fill out forms. Your payment will be processed based on the records already in the system. But there's more to it than just getting a monthly Social Security check. Your income from the previous tax year matters significantly here, and this is where a lot of folks are getting tripped up. where confusion is causing unnecessary anxiety. The income thresholds work like this, and I want you to pay close attention because understanding these numbers determines whether you get the full payment, a partial payment, or no payment at all. If you filed as a single individual and your adjusted gross income was below $75,000, you're looking at the full $2,000 payment. No reductions, no calculations, no complicated formulas. You get the whole amount. For married couples filing jointly, that threshold jumps to $150,000. If your combined income as a married couple was below $150,000, you're each getting the full payment, which means $4,000 total for your household. Now, I know what you're thinking. Most retirees aren't anywhere near those income levels, and you're absolutely right. The average Social Security recipient brings in somewhere around $20,000 to $30,000 annually. Even adding in some additional income from pensions, part-time work, or investment returns, most seniors are well below the $75,000 threshold for individuals or $150,000 for couples, which means the vast majority of seniors will qualify without any reduction whatsoever. You're getting the full $2,000, period. But here's something crucial that almost nobody is talking about, and this is important for people who might be right on the borderline or slightly above those initial thresholds. If your income falls between those thresholds and higher limits, you'll still get a payment. It just gets reduced on a sliding scale based on how much you earned above the threshold. Single filers earning up to $99,000 and married couples up to $198,000 will receive partial payments. The reduction is calculated at $50 for every $1,000 of income above the threshold. Let me give you a concrete example so this makes sense. If you're single and your adjusted gross income was $80,000, you're $5,000 over the threshold. That means your payment gets reduced by $250. So instead of $2,000, you'd receive $1,150. Still substantial money, still helpful, just slightly less than the full amount. For most people watching this video, this won't apply. But if you had some unusual income last year, maybe you sold property, maybe you took a large distribution from a retirement account, maybe you had higher earnings than typical, this calculation matters. Now, let's talk about the tariff rebate component specifically, because this is genuinely innovative policy, something we haven't seen before at this scale in American history. Regardless of how you feel about the politics, regardless of whether you support this administration or not, the economic mechanism here is interesting and worth understanding. The United States has collected billions of dollars in tariff revenue over the past few years, particularly from Chinese imports, but also from other sources. We're talking about tariffs on everything from electronics to clothing to machinery to raw materials used in manufacturing. When you buy something that was manufactured overseas and imported into this country, there's often a tariff attached to it. Those tariffs get paid by the importing companies, the businesses that bring goods into the United States. But let's be honest, let's talk about economic reality here. They usually get passed along to consumers through higher prices. When a company has to pay a 25% tariff on imported goods, they don't just absorb that cost out of the goodness of their hearts. They raise their prices, which means American consumers, people like you and me, effectively paid those tariffs through higher costs on everything we buy. The administration's position, and there's economic logic to this, even if you don't agree with the broader tariff policy, is that American citizens essentially paid these tariffs through increased costs. So Americans should receive a dividend from the revenue collected. It's similar to how Alaska gives residents a portion of oil revenue every year through the permanent fund dividend. Alaska said, "This oil belongs to Alaskans. The revenue from extracting it should benefit the people of Alaska directly." This tariff rebate follows similar logic. These tariffs were imposed to protect American interests and American workers. The revenue collected should be returned to American citizens. The numbers behind this are substantial. We're looking at approximately $140 billion in total disbursements if every eligible American receives the full amount. Think about that scale for a moment. $140 billion flowing directly into household bank accounts and mailboxes. That's real economic stimulus, real money circulating through communities, being spent at local businesses, paying down debts, rebuilding savings. That money is split roughly 60% from general economic relief funds and 40% from tariff revenue rebates. The tariff portion represents about $800 of your $2,000 payment, with the remaining $1,200 coming from traditional economic relief appropriations. The logistics of distributing this much money to this many people is genuinely staggering when you think about it. We're talking about processing payments for over 70 million households in a matter of weeks. The Treasury Department, working alongside the Social Security Administration and the IRS, has been coordinating for weeks to make this happen smoothly to avoid the disasters and delays that plagued previous distributions. They've learned lessons from previous stimulus distributions, particularly the problems that cropped up during the pandemic relief payments. Remember how some people waited months to receive their money? Remember the confusion about direct deposits versus paper checks? Remember people getting checks sent to addresses where they no longer lived? Remember the mess with people who hadn't filed recent tax returns? The government is trying to avoid repeating those mistakes, and from what I'm seeing in the planning documents and coordination efforts, they've put significant thought into making this distribution as smooth as possible. Speaking of distribution methods, let me tell you exactly how you'll receive this payment, because the method matters for planning purposes, for knowing when to expect the money, for making sure you don't miss it or mistake it for something else. If you currently receive Social Security benefits via direct deposit, and most people do at this point, your $2,000 payment will arrive the same way, directly into the same bank account where your monthly benefits land. This is by far the fastest method, and you should see the deposit within the first 2 weeks of January if everything proceeds on schedule. The Social Security Administration has your banking information on file already. They send you money every month, so there's nothing additional you need to do. You don't need to call anyone. You don't need to fill out forms. You don't need to verify anything. The payment will simply appear in your account, probably labeled something like Treasury Relief Payment or Economic Stimulus Deposit. And you'll likely receive a notice in the mail explaining the deposit either right before it arrives or shortly after. That letter will come from the Treasury Department or the Social Security Administration, and it will detail the payment amount, explain what it's for, and clarify that it's not taxable income. Keep that letter for your records. It might matter when you file taxes next year, not because you'll owe tax on the payment, but because your tax preparer might ask about any unusual deposits you received during the year. For folks who receive their Social Security benefits as paper checks in the mail, and I know there are still millions of you who prefer paper checks for various reasons, your stimulus payment will also come as a paper check mailed to the address the Social Security Administration has on file for you. Now, here's where timing gets a bit trickier, and I want to be honest about this so you can plan accordingly. Paper checks take longer to process and mail, naturally. Printing millions of checks, stuffing them in envelopes, sorting them by postal route, getting them into the mail system, and having them delivered takes time. You're probably looking at late January, possibly early February before that check arrives in your mailbox. I know that's frustrating, especially if you're counting on this money for specific expenses, especially if you're seeing neighbors and friends getting their direct deposits while you're still waiting. But it's the reality of processing tens of millions of physical checks. The government can process electronic transfers much faster than physical mail. One thing I want to emphasize strongly, and please take this seriously, make absolutely certain your address is current with Social Security. If you've moved in the past year and haven't updated your address, your check could end up at your old residence, and untangling that mess takes time you don't want to waste. It means calling Social Security, waiting on hold, proving your identity, requesting a payment trace, waiting for that process to complete, then waiting for a replacement check to be issued and mailed. We're talking weeks or months of delay for something that could be avoided by spending 10 minutes updating your address now. You can update your address online through your My Social Security account at ssa.gov, or you can call 1-800-772-1213, or you can visit your local Social Security office. Do it now if there's any chance your address isn't current. Don't wait until the check goes missing to deal with this. There's also a third category of recipients that doesn't get talked about as much, and that's people who aren't currently receiving Social Security, but who filed a tax return for the most recent tax year. If you're under retirement age but meet the income requirements if you're working, or have other income sources but your earnings fall within the eligibility thresholds, you'll receive your payment based on the direct deposit information from your tax return. This is how the IRS processed previous stimulus payments, and it generally worked well once they got the systems debugged. If you provided direct deposit information when you filed your taxes, your payment will be deposited into that account. If you didn't provide direct deposit information, if you received your tax refund as a paper check, or if you owed taxes and didn't get a refund, the IRS will mail a paper check to the address on your return. This group includes younger retirees who aren't yet collecting Social Security, people in their early 60s who retired but haven't claimed benefits yet. It includes people with disabilities who are in the application process, waiting for SSDI approval but not receiving payments yet. And it includes working Americans whose income fell within the eligibility thresholds, people who had lower earnings last year or who have modest incomes even while working full-time. Now, I want to address something that's causing significant anxiety for a lot of people, and that's the question of whether this payment will affect your other benefits. I'm seeing this question constantly in comments, in emails, in messages. People are genuinely worried that receiving this $2,000 could somehow reduce their Social Security, affect their Medicare, impact their Medicaid eligibility, or cause problems with other assistance programs. This is critically important, so please pay close attention. The $2,000 payment is classified as a tax rebate and economic relief payment, which means it does not count as income for the purposes of determining eligibility for federal benefit programs. Let me say that again in plain English, so there's absolutely no confusion. This money will not reduce your Social Security benefits. It will not affect your Medicare coverage. It will not impact your Medicaid eligibility if you have that. And it will not count against you for supplemental security income purposes. The payment is explicitly excluded from income calculations across all federal programs. Congress wrote this into the authorizing legislation specifically to prevent any negative impacts on benefit programs. This was a huge concern during previous stimulus rounds. People worried that receiving a stimulus check would somehow hurt them more than help them by reducing other benefits they depended on. The administration made sure to address it clearly this time by writing explicit protections into the law. However, and this is a big however that I need you to understand, you need to understand the tax implications for next year. The payment itself is not taxable income for this year. You will not pay federal income tax on the $2,000 you receive. It's classified as a rebate, not income, which means it doesn't get reported on your tax return as income and doesn't affect your tax bracket or tax liability. But here's the nuance, and this is where it gets a bit technical. The payment is technically an advance on tax credits, which means when you file your taxes next year, there could be interactions with your refund or tax liability depending on your specific situation. For most seniors with straightforward tax situations, people whose only income is Social Security and maybe a small pension, this won't matter at all. Your taxes next April will look essentially the same as they always do. But if you have a more complex financial picture with significant investment income, rental property income, business income, or other sources of money coming in, if you have itemized deductions or various tax credits you claim, you might want to consult with a tax professional to understand how this payment fits into your overall tax strategy. I'm not trying to scare you. For 95% of recipients, this will be completely irrelevant. But if you're in that 5% with complicated taxes, it's worth asking your tax preparer about. Let me talk about what you should actually do with this money, because receiving $2,000 is one thing. Using it wisely is another. Financial planning matters, especially for seniors on fixed incomes, especially for families living paycheck to paycheck. $2,000 is substantial. It's real money that can make a real difference, but only if you use it thoughtfully rather than impulsively. For someone living primarily on Social Security, this might represent 2 to 3 months' worth of benefits arriving all at once. That's a windfall compared to your normal monthly budget. The temptation to spend it immediately is real, and I understand that. I understand that after years of stretching every dollar, after years of saying no to things you want, After years of deferred maintenance and delayed purchases, getting a sudden influx of cash creates an almost overwhelming urge to finally buy the things you've been putting off. Maybe your refrigerator is making weird noises, running less efficiently, and you've been putting off replacing it. Maybe you've been skipping medications or splitting pills because the copays are too high. Maybe your grandkids have birthdays coming up, and you want to do something special for them for once. Maybe you need new clothes, need dental work, need car repairs, need 100 other things that you've been postponing. All of those are valid uses of this money. I'm not going to tell you that you can't spend it on things you need or even things you just want, but let me offer some perspective from people who've been through economic ups and downs, from financial advisors who work with seniors, from people who received previous stimulus payments and wish they'd handled them differently. The smartest move for most people is to create what financial advisors call a buffer, a cushion, an emergency fund. If you don't have an emergency fund, or if your emergency fund got depleted over the past few years dealing with inflation and rising costs, this payment is a golden opportunity to rebuild that safety net. Even setting aside half of the payment, $1,000, gives you breathing room for unexpected expenses. And trust me, trust everyone who's lived long enough to see patterns. Unexpected expenses always show up eventually. Your car needs a repair that you can't postpone. Your water heater starts leaking and needs to be replaced. Your furnace dies in the middle of winter. You have a medical issue that requires copays and deductibles. Your homeowner's or renter's insurance goes up. Property taxes increase. These things happen, not once in a lifetime, but regularly, and having cash available means you don't have to panic or go into debt to handle them. Without an emergency fund, these unexpected expenses become crises. You're forced to put them on credit cards at high interest rates, or borrow from family, or skip other necessities to cover the emergency. With an emergency fund, they're just inconveniences. You're annoyed, you're disappointed to spend the money, but you handle it and move on. That peace of mind, that security, is worth more than any purchase you could make. If your immediate emergency fund is solid, if you've got a few $1,000s set aside for emergencies, the next best use is paying down high-interest debt. Credit card debt in particular is absolutely brutal right now. Interest rates on credit cards have climbed to levels we haven't seen in decades, with many cards charging 20%, 25%, even 30% or more. If you're carrying a balance every month you wait to pay it down, costs you real money in interest charges. Let me give you a concrete example. If you have a $2,000 credit card balance at 20% interest and you're making minimum payments, you're paying about $33 per month in interest alone. That's $400 per year just in interest, not even paying down the actual balance. If you use this stimulus payment to eliminate that debt completely, you've just given yourself a $33 per month raise for as long as you would have carried that balance. Over a year, that's $400 back in your pocket. Using stimulus money to eliminate or significantly reduce credit card debt isn't exciting. It doesn't feel like you're treating yourself. You don't have anything tangible to show for it, but it improves your financial position dramatically. You're essentially earning a 20% return by eliminating that debt, and no investment you can safely make will match that return. Not savings accounts, not CDs, not bonds, not even the stock market on average. Paying off 20% interest debt is like earning a guaranteed 20% return, and that's extraordinary. For folks whose financial house is in order, who have emergency savings and minimal debt, this payment offers a chance to address quality of life issues that maybe you've been postponing. Healthcare expenses are an obvious category. Maybe there's a dental procedure you need, but Medicare doesn't cover. Maybe you need new glasses or your prescription changed. Maybe you need hearing aids, which can cost thousands of dollars, and Medicare typically doesn't cover them. Maybe there's a medication your doctor recommended, but you've been stretching your supply to save money, taking pills every other day instead of every day. Using this payment to catch up on health care isn't indulgent. It's essential. Your health is the foundation everything else in your life rests on, and neglecting it to save money is a false economy that ends up costing you more in the long run, both financially and in terms of your well-being. Untreated dental problems lead to infections and more expensive procedures later. Poor vision leads to falls and accidents. Untreated hearing loss leads to social isolation and cognitive decline. Taking care of your health now prevents bigger problems and bigger expenses later. Home maintenance and safety modifications are another category worth considering. As we age, our homes need to adapt to our changing needs. Installing grab bars in the bathroom reduces fall risk. Improving lighting throughout the house prevents accidents. Fixing uneven flooring that's become a tripping hazard. Installing a ramp if stairs are becoming difficult. Replacing worn carpeting that's easy to trip on. These aren't luxuries. They're investments in staying independent and safe in your own home. $2,000 can go a long way toward making your living space more accessible and comfortable. And unlike spending the money on things that depreciate or get used up, modifications to your home continue providing value every single day. Every time you use those grab bars, every time better lighting helps you see clearly, every time you navigate your home safely, you're benefiting from that investment. I also want to address something that's uncomfortable but necessary, and that's scams. Whenever the government distributes money, whenever there's talk of stimulus or relief payments, criminals crawl out of the woodwork to try to steal it, and seniors are unfortunately often targeted because scammers perceive them as more trusting, less tech-savvy, and more likely to have money available. You need to be aware that scammers are already preparing schemes to target people around these payments. They're setting up fake websites. They're preparing phone scripts. They're creating emails and text messages designed to look official. And they're ready to steal your money or your identity the moment these payments start going out. Here's what you absolutely must remember, and I need you to internalize this because this is how you protect yourself. The government will never call you asking for personal information to process your payment. They will never send you an email asking you to verify your bank account. They will never text you with a link to claim your money. Any communication you receive through phone, email, or text claiming to be about your stimulus payment and asking for information from you is a scam, period. No exceptions. Delete it, hang up, ignore it. The only legitimate communications will come through official mail from the Treasury Department, the Social Security Administration, or the IRS. Even then, those letters will never ask you to provide information. They'll simply inform you about the payment, explain how much you received and when, and possibly provide a phone number you can call if you have questions. But they won't ask you for your Social Security number, bank account information, or any personal details because they already have all of that. If someone contacts you claiming you need to pay a fee to receive your stimulus check, that's a scam. The government does not charge fees to send you money. If someone says your payment is being held and you need to verify your identity to release it, that's a scam. Your payment isn't being held. If someone offers to expedite your payment for a charge, that's a scam. Nobody can expedite your payment. The processing schedule is the processing schedule. I cannot stress this enough. You do not need to do anything to receive this money if you're eligible. It will come automatically based on records already in government systems. Anyone telling you otherwise is trying to steal from you. If you're unsure about any communication you receive, call the official Social Security number at 1-800-772-1213 or visit the IRS website directly by typing the address into your browser. Don't click links and emails. Let's discuss timing in more detail because I know people are anxious about exactly when to expect their money, when to start watching their accounts, when to start checking the mailbox. The January 1st date is the start of the distribution process, not the date when everyone receives their payment. This is important to understand to avoid unnecessary anxiety. The Social Security Administration is processing payments in waves based on several factors, including what type of benefits you receive and how long you've been receiving them. If you're currently receiving Social Security retirement benefits, you're in the first wave. those payments should hit accounts in the first week of January, possibly even on January 1st itself, if the systems process over the New Year's holiday. SSI recipients are in the second wave, typically a week later, so you're looking at mid-January. People receiving disability benefits fall into various waves, depending on when they started receiving benefits, and some technical factors in how their accounts are set up. Tax filers who aren't receiving any Social Security benefits will generally see their payments later in January, probably the third or fourth week. This staggered approach prevents the banking system from getting overwhelmed with millions of deposits all hitting at once, and it allows the government to monitor the process for problems and adjust if needed. If there's an issue with the first wave, they can pause and fix it before processing subsequent waves. During previous stimulus distributions, the staggered approach actually worked pretty well once they got the system figured out. The key is not to panic if your neighbor gets their payment before you do. It doesn't mean there's a problem with your eligibility or that your payment is lost. It just means you're in a different processing wave. Give it the full month of January before you start worrying that something went wrong. If February arrives and you still haven't received your payment and you believe you're eligible, that's when you need to take action. The IRS will have a tracking tool on their website, similar to the one they used for previous stimulus payments. You'll be able to enter your Social Security number and some basic information to check your payment status. That tool should tell you whether your payment has been processed, when it was sent, and what method was used, direct deposit or paper check. If the tool shows your payment was sent but you never received it, there's a process to trace the payment and potentially have it reissued. For direct deposits, the Treasury can trace where the money went. For paper checks, they can put a stop payment on the lost check and issue a replacement. It's not instant. These traces take time, but there are established procedures for handling missing payments. The economic reasoning behind these payments is worth understanding, even if you're not particularly interested in economic policy, because it affects how sustainable these kinds of programs are going forward, whether we might see similar payments in the future. The United States economy is in a peculiar position right now. On one hand, employment numbers look relatively strong. Unemployment is low. The stock market has been resilient, even hitting new highs. And we've avoided the severe recession many economists predicted a year or two ago. On the other hand, inflation has eaten away at purchasing power, especially for people on fixed incomes. The official inflation rate, what the government reports, doesn't capture the reality of how much grocery prices have increased or how much more people are paying for utilities, insurance, and other necessities. When the government says inflation is 3%, but your grocery bill is up 20% from 2 years ago, that disconnect creates real hardship that doesn't show up in the statistics. For seniors specifically, the situation is particularly challenging because Social Security cost of living adjustments lag behind actual inflation, and they're calculated using formulas that don't accurately reflect senior spending patterns. The COLA is based on the CPIW, which tracks spending for urban wage earners, but seniors spend money differently than working people. You spend more on health care, less on transportation. The CPIW doesn't capture your reality. When the cost of food and health care rises faster than the overall inflation rate, and those categories represent a bigger share of senior budgets, the COLA increases don't keep pace with actual expense increases. You're falling behind even with the annual adjustments. This payment is in part an acknowledgement of that gap. It's a way of providing relief that the automatic adjustment system failed to deliver. The tariff revenue component adds an interesting dimension because it represents a different philosophy about government revenue. Traditionally, tariff money goes into the general treasury and gets spent on government operations, programs, and debt service. The idea of returning it directly to citizens is more aligned with the Alaska oil dividend model, where resource revenue is treated as belonging to the people rather than the government. Whether you think that's good policy or not probably depends on your broader views about the role of government and taxation. But from a pure self-interest standpoint, as someone receiving the money, the philosophy matters less than the practical impact on your bank account. You're getting $2,000. How it was funded is interesting, but ultimately secondary to what you'll do with it. Looking ahead, the big question everyone wants answered is whether this is a one-time payment or the beginning of something recurring, whether we might see quarterly payments, annual payments, or additional distributions down the road. Based on the current legislative language, this is structured as a one-time distribution. There's no automatic renewal, no built-in schedule for future payments. However, we're in an election year, and economic relief payments are politically popular. They're one of the few policies that poll well across party lines. It's entirely possible that similar programs could be proposed again, either later this year or next year, depending on how the economy evolves and what political priorities emerge. But you should absolutely not count on another payment coming. Don't plan your budget assuming there will be another $2,000 in 6 months. Plan your finances assuming this payment is it, that this is the only one you'll receive. And if another payment materializes down the road, treat it as a bonus, not an expected income stream. That's the responsible way to approach windfalls. Hope for the best, plan for the worst. In closing, this $2,000 payment represents real relief for millions of Americans starting January 1st. If you're eligible, you'll receive it automatically. Watch for it in your account or mailbox, depending on your payment method. Use it wisely, whether that means building emergency savings, paying down debt, or addressing deferred needs. Protect yourself from scams by remembering the government will never ask you for information to process your payment. And don't count on future payments that haven't been authorized yet. If you found this information helpful, please like, subscribe, and share this video so others can get accurate information about these payments. Leave a comment below if you have questions or if there are specific aspects you'd like me to clarify. Stay informed, stay safe, and make the most of this opportunity to improve your financial situation.